Welcome to today's session. Umhlaka 26 August 2024. Yes, we're doing a live session today. We're gonna just be doing some live analysis. Obviously, if we spot any nice trade, we are gonna take it, but it's just all about, just doing the analysis, and if you see this, this is some of the trade ideas. This is from when 2021, 17 May. Interesting. So retail price, wholesale price, obviously supply where you have to sell, and then the demand is on this analysis. Just as a caution, remember, what I'm posting, what I'm doing analysis is what I call my projection. Okay, so remember, trading forex or futures or commodities can be substantial. So you should therefore be very carefully when you're trading because you can lose a lot of money. So remember, be very, and also just a little bit of understanding. There's something called the economic calendar. That's where you can watch some of the scheduled weekly economic data events, but we'll dive deep on that on another session. But today my main focus it's not gonna be on the weekly, it's not gonna be on economic data or talking fundamentals. It's just gonna be, just watching the charts. So we're just gonna be doing a weekly analysis. If you've got any pair, that you would love us to check it out, please make sure do not hesitate to ask, because I don't mind, clearly I don't mind. If ever you want a pair, you can just drop on the chat box and then we will take a look at that pair. So it's not a transmission, not a problem. Okay. So firstly, we can go and check out the gold. What happened to gold? I think we had some great news. Obviously, people in terms of gold, that obviously there's going to be some cuts in terms of the potential cuts in September, interest rate decision in the Fed. A lot of people are excited about that. But looking at gold, I think the gold has touched this level a couple of times. And looking at that level, see this level here. Let me just mute that because I can hear. All right. Yeah, perfect. Okay. So, welcome to the session, guys. As the morning, we are looking at the London session, obviously undergoing. Okay. So, if you're looking at gold right now, you can see it has touched the same level, a couple of times. So, let me just take that. Okay. All right. Okay, let me check this here. All right. All right. So, this level, the price has touched this level a couple of times. Chances are there's not much of orders in this level. Okay, so this level, the price is touched a couple of times. Touch here, another touch here, then a drop. And then obviously this form of compression is grabbing liquidity in some way. But you can see this here, a touch here. Chances are if it's gonna drop, it might be dropping at that level. Okay. Touching previous high. Okay, here. So that is my expectation on gold. Before it can make a drop, it needs to touch that level if it's gonna make a drop. Okay, let's just look at a bigger time frame. So this was the biggest zone, the flip zone. That has a nice flip zone. And if you're looking at that, you can see this is attached with the pin. So which means there was, see this push, this breakout candle, big candle breaking out of a zone and closing above this zone. This was a nice bullish candle breaking out from this zone, these levels. So you can see price touching this level, coming back touching level. Chances are price, it might just come back here, but we watch. Come back here and then obviously keep going up. So obviously this is a price when the price first time coming back to the level, and this here was a nice, you can call it a nice resistance level, and then obviously when the price break above it, now it becomes a nice support level, or we can call it a demand level, obviously if you're looking using the terms of demand and supply. So if it's going to reverse to this zone, it might just come back to this level. So my expectation on this, let's just go. So we've said that the price has touched this level a couple of times. So I'm just expecting the price. Okay, what other? Yeah. So okay, let me do this. Yeah. Oops, oops. All right. So the price has touched this level a couple of times. I think that's about it with gold. First touch, second touch, third touch, and then the fourth touch. Obviously, this touch is good. The price is gonna go to that level. Those are my expectation on gold. Okay, and if you're looking at the higher time frame, we can see that this was a very nice level that the price. You can see the price broke above here with this nice candle. Okay, so that's the candle where the price broke above this level. So this was a candle. You see a price breaking and then, oh, okay. And then coming back to the level. Then obviously I'm expecting the price to touch that level and then make another drop before there can be a nice bullish movement on gold. Okay. So if you are holding a buy, I think your buy is nice up until the price break above those levels. Okay, so those levels, there. All right. All right. Remember, if you've got any pair that you want us to go and have a look at, you can drop on the chat box and we can have a look at that pair. All right. So that is it on gold. So let me just check. So a price came back here and I'm expecting the price to go there. Okay. Let me just see how many pips is that. So from this level to that level, it's a bit of 100 pips. Okay. I always say avoid buying at the top or selling. Avoid buy, yeah, avoid buying at the top. I like if I'm gonna sell this one, I wanna sell here. Right over there. And if I'm gonna buy, obviously this level is a nice level for buying, but I like this level here. Okay, I like this level here. But in terms of the structure that I'm looking at, I think this structure is beautiful. Let me just do this, just remove everything on the chart. Yeah. All right. All right. All right. So if we draw a line here, and then we draw this on H4, you can see price breaking above that level. All right. And then we take the bearish candle, the last bullish candle before a bearish candle, which is here. All right. And do that. You can see these pins. So these pins here, these pins here, and the pin over there. So I'm expecting the price to go right there. If you go on a smaller time frame, just to get a very nice snapper entry, obviously the beautiful entry is there, 2529. All right, 2529. Remember, if the market or the market makers are going to be selling gold, they need to see a lot of people entering their buy. So they might just even do a pin that is going to go above this level. Obviously, remember there are some traders that have got their sell orders here on this level. So they've been placing their sell here. So their losses are up there because that's what has been taught. Also, some of the stop losses are above that level. So chances are, if they want to sell this market or sell gold, they might just want to spike above the level where their stop losses. So more traders will enter their buy, assuming that this market is gonna go out, is gonna break above 11 and form a new high. So if they do a spike, they might just induce more traders to enter their sell position and obviously take out some of the stop losses that are above that level over there. All right. Okay. I think that is it on gold. Nothing much. That is it on gold. And then another pair that has been interesting, for a couple of days, has been what? I think there's been a lot of talk around USDJPY. Let me just look at USDJPY. What do I see? And same thing, not same thing, because as traders, we're looking at what you call this. We are searching for patterns and pattern that repeats over and over. And we're also searching for a setup. So a setup, it needs to be the same thing over and over. Okay. So looking at USD JPY and the daily charts, that is what I'm looking at. Okay. And obviously F. All right. Okay. Can you guys confirm you can see my chart analysis and you guys in the chat box? And obviously, welcome to the session. Welcome Tombeni. Welcome Mr. Mieni. Welcome Mabaso. Welcome Ashmi Kof. And yeah, welcome guys. I hope you're good. So we're doing just a morning analysis, you know. Okay, yes, we can see. Okay, thank you, Kainsani, and thank you, Mr. Min. I appreciate it, guys. Thank you very much. I really do appreciate it. Okay, I'm looking at the USD JPY. So what this pair has done, obviously, move up and then come back to the zone. Okay, what's the Oh, okay, okay. No, welcome. You are most welcome. Let's do this. Let's do this. If you got any pair that you want us to check it out, please make it a point that you do share. Okay, so this is USDJPY. So what you want to see on any pair, if you're thinking of buying it, you want to see it. I went on the daily. This is what I see on the daily, right? So the price can do this. All right. So let's just zoom in on that. And whenever you see, for example, whenever you see a price like this obviously a lot of people are saying what the trend is a downtrend. So once the market has been on the same trend over, a lot of traders believe that market is a bearish market. Therefore, it's gonna keep selling, keep selling. But remember, if you believe the trend is your friend, you're gonna enter in those sell position over and over. When you see a market pull back, you enter a sell. So that is a good thing for market makers because now a lot of traders are convinced whenever there's a pullback, that market is gonna drop. But sometimes it does not drop. And I want you to look at this. So if you're looking at this, you can see obviously there was this bearish candle, this big candle drop, another drop, but then there was this candle here, right? What is this candle? Why is this candle important? I can call this candle a base, okay? Because the base, looking to your left, you can see after this, obviously this drop, 1, 2, 3, bam, coming back to this level. Let me just mark that level that I'm talking about so we can all be in the same page. You can see that was a bullish engulfing or demand zone. Price drop, break above, come back 1, 2, 3, drop. These are daily candles, right? Coming back to the zone and the price here break above that level. Remember, there are some stop losses above there. So the price break above that level. So if you're looking left, you can see this is a critical zone. That's why when the price broke above, it left this here, this base, this candle. Okay. And obviously, this candle, yeah, and the price drop 1, 1, 2, 3. When it came back, retested that candle, and it made another drop. Okay, so my expectation, just go zoom out of this, and if you're looking at the weekly charts, you can see this is obviously first time, second time. So this is more like a bigger above, just above breaking this level, just above breaking this level. So we can expect some sort of a W or a double bottom being formed here. All right. So let's just go over to the weekly, to the 4 hour. I'm just gonna remove a couple of things. You know, I need to master this thing of just pressing one button and everything just disappears. Yeah, I need to master that. Okay, so we can see the market. Obviously, remember we marked that chart on the daily. Remember we marked that candle on the daily. We marked that level on the daily. Okay, this candle is opposing momentum of a drop. Okay, this drop. If the market has been dropping like this, bank traders or market maker, they need to take some profits. For them to take some profits on the sell, the market needs to pull back for a buy. All right. If you check this Fibonacci, we want to see a pullback up to the level of 50. So the level that is nice above the 50 is that level over there where there's this, where this thing is happening, All right. So we want to take a buy here, but that buy is going to give us this towards that level over there. So while this is going up, obviously expecting that the gold will be dropping as per previous analysis. Okay. So if gold is dropping, this is going up. So yeah, okay. So we should be good. Looking at the bigger structure, you can see the structure and the market moving like this and coming to the setup. So, and then coming back to this zone. All right. So what I'm marking here, I just want you to note a couple of things. So this is, okay, 1, 2, 3, 4, 5. All right. I will tell you why I said that, but then a pull back towards this zone, same level as that zone, and then first touch, coming back, second touch. So this is some sort of a double bottom or a W, then the price touching this level. I've marked with the Fibonacci. I'm expecting a pullback to be over 1561 level, but in that level, the critical level is that level over there. So I'm expecting the price to touch here, somewhere here, and then obviously a pullback to that level. Remember, this should be around when Fed announces some sort of potential cuts on the dollar, and then that cuts on interest rates, not on the dollar. And then the price obviously should be dropping on those days. Okay, so that is my view on USDJPY. I hope you guys are getting that. All right, let's just go on a smaller time frame just for a bit of a sniper entry. Okay, so we've marked that. We've done the marking on this. All right. All right. Is it clear here? No. Okay, let's go to 1 hour. All right. All right. Let's just see what is going on. Okay. So the previous candle, the last candle before the bullish momentum is this candle. So we want our entries to be here, to be here. So another thing that you can do, remember, I think on the last session, we spoke about having the use of pending orders, okay? So I've marked that. So let me do this. So, okay. So I've marked that. All right. Okay, we're just gonna do, all right, and then so I've marked that 61.1. So let me just do a marking on that too. All right. Okay, let's say, okay, so now what you need to do whenever you are checking this trades, always calculate what we call the RR. Okay, what is the risk you are taking? The risk obviously is your stop loss. Okay, so from there, so what is the risk on this trade is putting obviously your stop losses below that level. So that'd be my entry for a buy here. And then that would be my take profits. That is my reward. From here to there, that is my reward. And then obviously the stop loss, you can always calculate your RR whenever you're taking some trades, okay? And this was a nice sell, by the way. Nice sell here. Okay. So what we can do is just, okay, let's just zoom out. Okay, you can go new order because we've done analysis. New order, let's just use smallest lots. Pending order, buy limits. Which level are we buying at? We are buying at this level, okay, because we want to get the sniper entry. All right, so we copy that. We paste it where? At price, where we want to enter. And then we take that level and we mark that level as our take profits. So we take that too and say, okay, take profits. All right. And then we want to do what? Stop loss. All right, let's go to the daily charts so we can see properly where exactly into the stop loss. So stop loss can be here. So we are marking that as our stop loss. So new order, okay, stop loss there. So now we've got what? A buy limit. So a buy limit is active. We go on the hour charts, hourly charts, 4 hour. So now we've got a pending order. All right. So we've got a pending order on USDJPY. And if a price comes back to that zone, we get a very nice sniper entry here. All right. Okay, that is going to be our entry on USDJPY. And our target is there. That is where we want to have our take profits. Okay, is there a question? Let me check. Can you do GU and when you're done with UJ? Okay, no problem. You can do GU. All right. So, and you can see obviously the price came back to this level here. And if you are trading using, I know we've got some guys within the group that are trading the best market maker strategy. If you've got a pair that you feel like, can we analyze with BTMM? It's no problem. We can do that for you guys. Just because the key to this session is just for you to understand, you know, taking trades, and you can see this here was some form of compression. Remember, compression is trapping traders in both direction, those that are buying and those that are selling. So after this compression, you're always going to see a nice move, whether to the upside or to the downside. So this is going down. So I'm expecting this price to come back here and then go to that level. So that's why I've got that. I think we've done with gold. So with gold, and you can see that gold is actually moving higher and higher. Okay. So, and it's actually doing what we said it's going to do. So, like we said, gold is going to break that level and it's already done that already. Okay. So, they're going to need to break above here to convince traders to do what? To enter. They might just break even above that level to convince traders to buy. So, they can just drop the price towards that similar level because this level was a very nice zone. All right. Okay. I think we've got a request on GU. All right. GU. What is happening on GU? Let me just maybe perhaps show period separator so we can see what has been happening. So this is what today. This was Friday. Okay, this was Friday. GU. And right now it's just been flat, nothing much. Okay. But what you're gonna do, obviously, you're gonna look at the higher time frame. What is going on in the higher time frame? Just remove all this. All right.
Yeah, what's it?
Yes?
Yeah, what's it?
Yeah. Oh, can you explain how you mark your levels? All right.
I
Oh,
know story.
okay, let me just mute that. All right. Oh, how do I mark my levels? All right. So what I look for a supply level, I look for a demand level, I look for a place where the price actually broke above a certain level. For example, the first thing that I do, I can change this into a line chart. Okay, let me just uh, really clear up everything. All right, let's clear up everything. This is GDPUSD because I don't see much on this. H4, I'll go to the daily. Daily, okay, still loading, doesn't show me much. All right, let me just delete that. It's not giving. All right. So, what I do, I mark certain level. For example, here, this is the highest level, and this is the lowest. Okay. Right. I hope I'm making sense. Sometimes I'll just say, okay. So this is a high, this is a high, this is a low, and the price is right about in the middle, right, of this. Okay. So what you can do, you can see the price obviously was mainly just more ranging in the range, but this range was a compression that is dropping, or pumping, call it a channel that is dropping, right? But what I can do, I can take this level, take it as my high, this level here, okay, because the price, okay, if you change this into a line chart, it's clear on the line chart, okay? And it's clear on the line chart that this now is not moving as aggressive as it was moving when it was going down, right? And also this, okay, so, and obviously this here has been moving up aggressively, and then now this side is no longer aggressive. Okay, so which means whatever buying position that we're taking here, it's around about that time where the profits are going to be taken in this zone, right? So what is okay? Okay, let's change this again to candlesticks. So let's take that low and we put this here. All right, so it has been clearly above our zone. So this will not work. So this will not work. All right. And then if we change this into a line chart, okay, what do we see? We can see a price touching this. So if you mark that, see that level, touching level, same level, and just round about there, the price is almost in that level. Okay. If we mark this using a just clearly the horizontal line, you can see. All right. So I've used, I think this is much clearer if we're using a line chart. Okay, so you can see a price has been touching this level. Break, went above, break above it, now come back, touch this level. Now it's clearly in that level. Okay, but obviously, if you go back to this, you can see obviously the price broke above, and now it's here. It's here in our zone. But before we can sell GU, we want to see price giving us a stop hand to the upside if you want to sell it. All right. So, okay, I think we change this into, yeah, I think we just put a separator. All right. So for us to sell this, it needs to give us a stop hand to the upside, and then we can sell it. Okay. But the way that I mark my chart, for example, if a price break like this to the upside, if a price break really such a huge candle like this one here, let me just remove that. Just remove that. Oh, just remove it. Just remove this. All right. Yeah. So if a price break clearly with a huge candle like this, I will expect the price to come back and retest that zone. So I'll mark exactly the point where the price actually broke a level. I'll mark that as my level where I'm expecting the price to come back, and just remove those two lines so we won't be confused by them. So I expect the price to come back on this zone. So that is how I mark my chart. The price broke exactly at that level over there, this candle. So this zone is critical because the price broke above it. Remember, if a price breaks above a zone, there were some traders that have got their stop losses around here. There are some traders got their pending orders around here. So those orders probably be activated. Some stop losses were taken out. And then obviously you saw this market becoming bullish with this candle. So I'll mark this as my zone of interest that the market will come back here and retest the zone. And obviously, with this, obviously, this price being the most bullish candle, obviously, we expect the price to come back to that zone because there were a lot of buyers here. But if you go on the weekly, as we have analyzed, obviously, this zone, I'm expecting it because it's a high liquidity zone. And you can see if we mark it, we've marked this before, you can see it's high liquidity zone. So you expect price to do this, to form very nice M here, all right, and then obviously a drop. So because why? This price has formed a compression and then suddenly breaking above, taking out stop losses for those sold. The traders actually place a sell, and then this is going to be a stop hunt inducing traders to go long and then a drop. All right. So that drop, it can come back to this zone here. All right, to this zone here, and you can see clearly this is a nice, okay, I don't want to mention a pattern. I don't want to mention a pattern. If you can see it, you can see it. If you cannot see it, join the mentorship. No, I'm kidding. Yeah, but that's how I see GU. I hope we are on the same page. Okay, so remember, avoid to sell without seeing a stop hunt and avoid to buy without seeing a stop hunt. So, meaning what is a stop hunt? When the price is moving in the opposite direction. For example, for us to start selling GU, we want to see a huge candle going up or even a pin, whatever, and then we can start selling it. Okay, without us seeing that, we are not gonna sell it. Okay, remember, always look for high probability trades. If it's not clear enough for you to take a trade, like for example here, there's nothing that said take a trade here. If it's not clear enough, it's not a good enough trade. Look for other pairs or instrument. Don't waste your time on something that is not moving, that is not giving you a proper setup. Look for a trade that is simple, where you can clearly see a setup, that is going to make money for you. Obviously, have some rules if you are trading. Don't just go into the market without having any rules. What is happening on gold now? Let's see. Let's see. How far is it on that? We take a shadow of that. We want to see what is happening. Okay, he has not touched yet, so good. All right. Let's look at DEX. Guys, it's very important to trade indices. Indices, obviously, you need to have a little bit of capital to trade them, but indices they pay a lot of money if you know how to trade them. Okay, but because it's in the morning, we're gonna look at DEX, the German. Okay, we're gonna looking at that. All right. So you can clearly see this here. Okay, let me just first change this into a line chart. Okay, remember, same thing again. What do? I change into a line chart so that I can clearly mark the zone that are critical. So I'm gonna mark this level because the price touch it, and I'm gonna mark that level, and I'm gonna mark that level. All right, so the price is clearly, if you're looking at the price now, it's not moving as aggressive as it was in this level. So now the price is forming some sort of a compression like a spring, or we can call it like a staircase. Let's change it to, you can see the price is not moving as aggressive as it was moving here in these levels. Price was aggressive here, but now price is no longer aggressive here, right? And if you look left, you can see this has been happening, all right? So the price has also been touching these levels, okay? Touching these levels. First time, second time, and there was a pin bar. There was a pin to the upside, and then another time the price touch, and it's here now. Same level, right? Chances are these levels are very weak. There's no orders in this level. So the price is gonna break above it. You know. Why? Because this here has been some sort of a compression, trapping traders in both ways. So for them to make money or to take any profits from these trades, they can just push the price up, which is going to be a stop hunt, inducing traders to enter their buy trade and then obviously drop the price. All right. That's how they can take profits if they want to enter even more trades in these levels, in this level, in this level. If you've been buying something, now you want to make some profits and sell it, you need people that are going to be selling, so you need the price to drop. And obviously, if also you want to buy it again at that price, that lowest price. So in this level, it's a very weak level. Chances are the price is going to break above that level with a nice big candle, and then that can be a pin and then can drop towards this level. So this is not a nice trade to take because of this compression. If you're entering a sell here, the reason I'm saying that is because of these one, two, three, right? So it'd be nice, perhaps those people those traders like to scalping, they can take a scalp for a buy, whatever, and then up to this level and the price drop. The nice trade will be a buy here because of this nice bullish candle. Then compression. This is when the market makers are taking profits. So they're taking profits from all this movement from here. Okay, remember, the nice trade for a buy is when there was a huge sell. There was a huge sell. A lot of people were convinced this is a bearish market, so they started selling, selling, selling. So a lot of selling momentum. Then suddenly, after this one candle, see the black candle that is black, the last candle, last bearish candle. You entered sell, and then suddenly there was this momentum of buy. And then, so if you want to take some profits from this trade, from these buy profits, they need the market to reverse a bit. And when it does reverse a bit, that is where, if you mark that, check that. So the level possible could be here. All right. Let me just remove that. All right. I think that's what it's on GU. That's what it's on GU. All right. Okay, I think we're good. What else can we do? We've done that. Maybe we can do what? Nasdaq. All right. But the thing is with Nasdaq, it move in a similar fashion as with this thing. as with DEX. So they move similar fashion. Okay, so this can happen when the price drop here and the price move up to the upside. All right. What did we? Okay, maybe we can look at CAD. Any pair with CAD? I think somebody said just look at your CAD. Okay, do this. All right. Okay. So clearly, even this pair, you know, this pair obviously has been doing like compression towards the upside.